Thank you for joining us tonight. My name is Barry Erickson, and I'm Community Engagement Coordinator at Wheaton Public Library. Tonight, we are proud to bring you this presentation about how to monitor and improve your credit score. Tonight, we have two representatives from the Dupage Credit Union, Pam Nystrom and Kim Alongi. They will discuss what factors into a credit score and why it's so important to keep your score healthy. We will find out how to request a credit report and how to check for and correct errors. We'll also learn the best practices to maintain a healthy score and what steps we can take to build our credit score for greater economic opportunity. Kim Alongi is the Dupage Credit Union's residential lending manager with over 15 years of lending experience. Pam Nystrom is the credit union's business development and community outreach professional. Her role is to share the many benefits of the credit union and assist members with their mortgage needs. Both Kim and Pam are dedicated to helping members find just the right product to fit their needs. This program is being recorded, and we will send out contact links to the credit union and to their representatives following tonight's presentation. So with so much expertise and important information to share, I'm anxious to turn the mic over to you, Pam and Kim. Thank you for being here tonight.
And thank you so much, Barry, for having us this evening. Both Kim and I are very excited and honored to be here and share this opportunity for this timely information, given everything that this past year has brought to the table. We think that this presentation is going to be very helpful to the community. To take just a minute before the presentation, I wanted to familiarize our audience just in case they might not have heard of the Dupage Credit Union. And we're right on Roosevelt Road in Wheaton. But just to share a little bit about the credit union, it began in 1956 with a group of Wheaton educators who founded the future Dupage Credit Union. Inspired by the credit union's philosophy of people helping people, the teachers actually pulled their money together to provide low-cost loans. Now, over the years, we have recognized the need to expand our reach, and we now serve not only just educators, but the communities at large. The credit union is more than just a bank. One of our standout features is that we're a member-owned financial institution governed by a voluntary board of educators. We are committed to creating a memorable banking experience to help you with life's events, no matter big or small. And being here this evening not only is an honor for us, but it's just a small example of how we like to support our local communities. So with that, I'd like to turn it over to our presenter, Kim.
Thank you so much, Pam, and thank you for the opportunity for us to be here, Barry and Wheaton Library. We certainly appreciate it. I am Kim Alongi, and I have been advocating for our members at Dupage Credit Union for over 12 years now. I've been in financial services for over 15 years, and I am our indirect lending manager. So I have reviewed thousands of credit reports over my 15 years, and I'm happy to present to you this information today. On tonight's agenda, we have a brief overview of why your score is important, what is and what is not listed on your credit report, the FICO formula, so the general equation used to formulate your credit score, some tips for improving your score. Then we'll discuss how you can check and correct your credit report and make any necessary changes to anything that is not reporting accurately. And then we'll wrap it up at the end, leave a little bit of time for some questions and go over everything one more time. So now we will go ahead and get started with a little game, fact or myth. Credit scores are calculated using information in your credit report, even if that information is not correct. True or false? This is true. Credit reports are provided by the credit bureaus and are only as good as the information that is collected and reported to those bureaus. So if something is inaccurately reported, even something as simple as your name or address, that is going to reflect on your credit report and could, if it's account information, impact your score. Next, the more money you make, the better your credit score will be. True or false? This is false. Your employment status, your income, your socioeconomic factors, none of that is factored into your credit score. Oftentimes, we find that lines of credit are on a sliding scale based on your income, but the more money that you make doesn't necessarily mean that you're managing responsible on-time payments. Next up, a score determines whether or not I get credit. This is one that trips a lot of people up. This is false. Oftentimes, your credit score will drive the pricing that you pay for credit, but it may not factor whether or not you have been approved or denied for credit. Next, you do not need to carry a balance on our credit cards in order to build a credit history. This is true. Even if you pay your credit card balance, your credit card statement off each and every month, that is still reported to the credit bureaus, and that on-time repayment history is going to increase your credit score. We'll dive into that a little bit later. And finally, a poor credit score will haunt me forever. This is false. Think of your credit score as the ultimate selfie. As you change your hairstyle or fashion changes and your profile pictures change, so does your credit score. As you're increasing purchases or paying down credit, taking on new debt such as car loans or mortgages, your credit score is constantly fluctuating throughout the day, the week, the month, and certainly the year. So now let's just go ahead and get right started. Your credit score is the objective measurement of credit risk, and the purpose of your score is to predict the likelihood of delinquency within the next 90 days. Why is this important? Well, it may affect the price you pay for credit card interest rates or car or real estate loans. Even applying for a job, over 60% of employers in today's market are obtaining a credit report on someone that they're looking to hire. It's also important when you're renting an apartment or perhaps getting other utility services. A higher credit score may then benefit you by having a cheaper or null deposit, while a lower score may result in a higher deposit. Credit score may also affect your home and auto insurance. Oftentimes, insurance companies are taking a look at your credit, of course, to see how you're managing payments to others. And oftentimes, the higher your score is, the lower your premium will be for these insurance policies. Of course, getting the most competitive interest rate and paying the least amount for what you are borrowing is the name of the game. So a higher score is certainly going to make you eligible for the lowest, most competitive interest rates. And here's an example that's very, very striking. If we're looking at a mortgage loan for $200,000 at 3.625% over a 30-year term, this would give you a principal and interest payment of $912 and over $128,000 in interest over the life of the loan. Versus someone who had just a little bit lower of a credit score, resulting in a higher rate, only 1 point, but that $200,000 at 4.625% over 30 years now gives you a principal and interest payment of $1,028 per month and $70,000 in interest paid over the life of the loan. That's a savings of over $100 per month and over $41,000 over the life of the loan. That is a huge impact. And that's exactly why we're here, to make sure that you're doing everything that you can to maintain a good credit score and pay the least amount that you can. There are 3 credit bureaus: Equifax, Experian, and Transunion. As I had previously mentioned, these bureaus collect and report the data that has been provided to them. And each bureau can have different information that is being reported to that specific bureau. So if you're taking a look at credit or looking to obtain credit, it's most impactful to look at all 3 bureaus to gain a complete picture of what your true credit profile looks like. Additionally, each one of these credit bureaus has several different scoring models. Another thing that really trips up consumers that we'll dive into a little bit deeper later, but each bureau has several different scoring models and can create different scores within the same bureau. Pretty confusing stuff. But we are here to help dispel some common myths and give you all the resources necessary in order to maintain a good score. FICO, which is Fair Isaac Corporation, is most commonly used. This is used by over 95% of lenders and can have scores ranging from 300 to 850. There is also a Vantage scoring model, which ranges from 501 to 990 and is a lesser used model. So what is listed on your credit report? Well, there's identifying information such as your name, address, social security number, date of birth. These are all listed to help the lender identify that who that they are speaking with or conversing with online is in fact that person. Now, the credit bureaus are only as good as the information that's reported to them. So if even identifying information is incorrect, we'll go over later on how you can make those simple corrections. You could also find account information listed on your credit report. This is the real meat and potatoes of your credit report. It's going to list the name of the creditor, what your current balance and minimum monthly payment is, and the repayment history over the life of the loan or line of credit. Public information, public records such as collections, bankruptcies, judgments can also be found on a credit report. Hard inquiries. These are institutions that have accessed your credit report within the last 24 months. You can see those on your credit report. And perhaps an optional consumer statement. Oftentimes, if someone has been a victim of fraud, they will put a consumer statement on their credit report, just asking the lender to call at a specific phone number to verify the person's identity and that there is no fraud. These are questions that we get all the time at the credit union. How long does this information stay on my credit report for? Well, accounts that are currently open and being paid on time will remain on your credit report until that account is closed. And then those paid and closed accounts will remain on your credit report for 10 years. Negative information, on the other hand, is a little bit different. So negative information will report for 7 years from the date of delinquency. If this account is still open and that account was delinquent 7 years ago, it'll show in a small area that there was a small delinquency a long time ago, but that is no longer impacting your score or really being reported properly on the credit report. The 7 years from the date of delinquency will fall off of the closed accounts. So after the account is closed, and if it is delinquent, that account will be wiped from your credit report after the 7 years. Chapters 7, 11, and 12 bankruptcy remain on your credit report for 10 years, and a Chapter 13 bankruptcy remains on your credit report for 7 years. So before I get into the next topic of the overall FICO formula, Barry, are there any questions from our audience?
Not right now, but I know in the past I've been asked, are there any specific recommendations, just as people are getting started with their credit, young adults, are there any particular things that they should be watching for or trying to do in order to start out well with their credit score?
That's a great question. You should, while it's good to be established in credit, you don't want to go off the deep end and open too many accounts at the beginning of your credit profile. So working with a local financial institution, your local credit union, will certainly help and guide you and offer you a small line of credit, whether it's a revolving line of credit or a small secured loan. We have several different options, as do others out there, to help start building your credit profile. And one interesting tidbit here is that it takes 6 months in order to generate a credit score for the first time, or even after an extended period of inactivity, which is determined to be 24 months. So if you're fresh 18, just starting out, and you go and you open your Dupage credit union Visa, it will take 6 cycles, 6 payments for a score to be generated for the first time, and then will automatically reflect how you've been managing that line of credit, and you'll start building from there.
Great, great. And there was another question entered. What is Chapter 12? And how does that bankruptcy differ from like 7 and 11 and 13?
Yeah, 11 and 12 are more commonly used for businesses. So really for personal use, you hear of the Chapter 7 or 13. 11 and 12 wouldn't be applicable for consumers.
Okay. All right. Well, I think that's all the questions we have for right now. Just a reminder to all of our participants, please go ahead and open up your Q&A window and so that you can enter any questions that you might have. But at this point, we're anxious to get on with the rest of the information, Kim, so I'll turn it back to you.
Perfect. Thank you. So a credit score is based on 5 factors, each weighted differently. These factors are payment history, capacity, the length of credit history, types of credit, and new credit. Now we'll dive a little bit deeper into each one of these 5 factors. The first and most important factor in your credit score is payment history. On-time repayment history is the single most important thing that you can do to maintain a good credit score. Specifically, your repayment history within the last 24 months carries the most weight in your score. Additionally, if you were to become delinquent, the more recent that delinquency will have occurred, the greater it will impact your score. This is like the old adage, time heals all wounds. The more time that elapses following that delinquency, the less it's impacting your score. So it's going to impact your score the most right away, and then be factored less and less and less into that overall score. That is true if you go back to paying on time. The opposite will occur if you continue to stay and become more delinquent. So the more severe the delinquency that you have, the greater that is impacted on your credit score. For example, if you were 30 days past due on your mortgage, that would have a negative impact on your credit score. That's true. but it would have less of a negative impact than if you were 90 days delinquent on that payment. Additionally, charge-offs, foreclosures, repossessions, those are all carrying higher weights and can negatively impact your credit score. The next 30% of the formula is based on capacity. Capacity is the amount that you owe versus what the overall line of credit or what the beginning balance was. Here, it's really capacity is king. Generally, the formula will reward you more if you stay below 30-35% of your overall credit utilization. For example, if you have a credit card with a $10,000 line of credit, the formula will award you the most amount of points if you keep that balance below $3,500. Now, as long as you're paying on time, that's more important. But if you were to be paying on time and maxed out on your credit card, you're going to see your score decline a little bit because it is 30% of the formula. So it is pretty heavily looked at by the formula, and that just tells lenders if this person kind of gets into a jam, are they going to have a little bit of cushion there if they need to fall back on it. And your revolving balances compared to your limits carries the most potential to gain or lose points. So generally, I've found that you gain or lose 1 point for every 1% of capacity that you use or pay down. And then finally, this is also true for installment balances. So even though if you were to have a fixed term loan, such as a car loan, with a fixed term, a fixed payment, it's not a revolving line of credit. So you're like, I'm not maxed out, I'm paying this down. How is this impacted in my capacity portion of my score? Well, when you first take out that loan and the current balance is also at the original loan amount, that's almost a null point on your score. But as you start to pay down that loan and it's a greater difference between the original balance and your current balance, your score is going to increase. The formulas will also reward you if you're making accelerated payments. So if your car loan payment is $400 per month and you're making a $425 a month car payment, it's recognizing that you're paying that balance down at that accelerated rate, and it's going to reward you more points for that. The next 15% of your formula is based on the length of your credit history. As I had said at the beginning, it's good to be established and have a diverse credit profile. When you're just starting out, or if you're refreshing your credit, perhaps post-divorce or post-bankruptcy, whatever your situation may be, just try to avoid opening too many accounts at one time, because here there's 15% of your score that's based on this length of history. So if you've had a Sears card open since 1978, that is awarding so many points to your credit score and into the formula. And that 15%, you're getting all of the best of it because you've had that account open for so long. All the other lenders that look at that are going to say, yep, Sally's maintained this line of credit for an extended period of time. She hasn't defaulted. Even if she's gone delinquent a few times, she's still there and has never gone bad on the debt. So this overall age of credit is certainly impacted in your credit score. And this is where we as consumers will hear a lot of the time that it might hurt your credit score to close an account. If you hear that, that's because it could affect that overall age of your credit. Now, if this is an account that you've recently opened, even within the past 2 or 3 years, closing those accounts aren't going to have a big hit on your credit score because they're still relatively young accounts. They're not very aged. And if it helps you from unwanted spending, it might be in your best interest to close those accounts anyway. The rule of thumb here is really try and stay 2, 3 new trade lines per year is kind of what the average consumer has, you know, whether it's a mortgage loan, car loan, or credit card. Um, just the other day, unfortunately, my refrigerator went out. And so we're scouring just to find one in stock that will fit our family's needs and our budget and all of these other factors. And I know from just knowing that I'm paying my bills on time that I have a good credit score without even seeing what it actually is. And so, you know, when I go to the Home Depot checkout, they asked me if I was interested in their credit card because I would save quite a bit of money because it's a large appliance that I'm buying. And I said, sure, absolutely, because even though I'm opening new debt, what I'm doing is I'm increasing my capacity and I'm also saving a large chunk of money. So, and I know that I'm not opening too many new accounts recently, so I'm fine with opening that new trade and taking that quote unquote hit to my credit in order to save what I did. For me, it was a calculated risk that is in my benefit. So don't be afraid to open new accounts, and don't be afraid to close accounts that you don't need, especially if there's an annual fee being charged, you know, and you're not using it. What a waste. So moving forward here, the next 10% of your formula is based on the types of credit that you have. There are 3 different types of credit. There's revolving debt. This is your overdraft protection or your credit cards. Next is installment debt. These have a fixed term and fixed monthly payment, and you know that at the end of the term, the debt is completely eliminated, such as a debt consolidation loan or a auto loan. And then finally, real estate. You have first mortgages, second mortgages, home equity lines of credit, and having a good mix of these different types of credit shows that you are a diverse borrower and your score will be rewarded for such. But it is a minimal part of the pie. And the final 10% is new credit. And this is the hot button topic for sure, even though it's only 10% of the formula. And that's what's difficult to get past what we're being fed, is that, oh no, you don't want so many different people to run your credit and it's really going to drag down your score and this and that. Like my Home Depot example, I was fine with opening that new account because I'm only opening one account, so I'm not opening excessive amounts of credit. And also, generally, a inquiry on your credit is only having about a 5-point effect on your score. So I'm fine with taking that minimal hit right away because I know I'm getting the better deal in the long run. And my credit will certainly rebound because I will be paying that credit card back on time. Hard inquiries. Hard inquiries are items that are listed on your credit report, and these are the institutions that have inquired into your credit report within the last 24 months. Now, Inquiries that just occur, it's going to affect your score right away, and then it's going to start rebounding. So an inquiry that you had 2 years ago is almost a null point in affecting your score. And then there's soft inquiries. Soft inquiries are the inquiries that are not reported on your credit report, and they are not factored into your credit score. An example of a soft inquiry would be an insurance company looking at your credit, or even the pre-screen offers that you receive in the mail. Those organizations don't know for sure what your credit profile is, but they've probably had a soft inquiry done on your credit, and that's why you're receiving that pre-screen offer, because you fit some criteria that they're looking for. So don't worry, when someone says, well, I have to run your credit. Well, if it is part of your consumer transaction that you need to conduct, go ahead and do it. It's a minimal effect on your score. Now, adversely, if you have multiple excessive hard inquiries on your credit report, now that's really going to start to drag down your score, especially if they are not of the same type. So several years ago, it was mandated that inquiries of the same type made within a short period of time, which is about 10 to 14 days, will only count as one inquiry on your credit report. So if you're going car shopping or you're shopping for a mortgage loan, it is your right as a consumer to shop around for credit to make sure that you are getting the best deal. You just want to do this in moderation. You do not want to go to the dealer and have them run your credit with every single lender that they have available. That's not good for you or for them. But looking into a couple places to get the right price, it's not something that you should be fearful of. And then now that we know what is factored into your credit score, let's quickly go over what is not factored into your credit score. Race, religion, age, sex, marital status, these are all protected classes and are not factored into your credit score. Where you live, what your income is, whether or not you're employed or not, or retired or a student, that is not factored into your score. Consumer initiated requests. These are another example of soft inquiries. In just a moment, I'll go over how you can check your credit report at annualcreditreport.com. And when you're checking into your own credit, because that is your right as a consumer, that is not impacting your credit score. Any loans that are denied are not factored into your credit score. The inquiry that the lender made is reported on your credit report as a hard inquiry, but whether or not you were approved or denied for that loan is not factored into your score and is not reported. Now, me as a lender, if I see Best Buy inquiring in your credit, and then I see the next month that a Best Buy credit card was opened, now I can put 2 and 2 together that they approved you for that request. But even if it was a request that you were approved and that you did not take, you declined their offer, or you were denied their card, that would not be factored into your score. Debit card payment history is also not factored into your credit score, while credit card payment history would be. Credit counseling is considered a neutral status, and it is you as a consumer reaching out for help, so that is not factored into your score. And then finally, deferred student loan payments. While the student loan is in a deferral status, that is not impacting your credit score. It's not factored into your score once that loan goes into repayment. If you're paying that loan on time, that is certainly factored into your score, or if you are not paying that loan, that will be factored in. But while in deferment, no big deal. Barry, I think this is a good time to pause if there's any other questions.
Sure. We had a question about that payment history, that largest piece of the pie, and how often you're paying and when there might be delinquencies. And you mentioned the length of time that you're delinquent is certainly a factor. But how about the amount that you owe? So for instance, let's say that you were delinquent and for some reason you couldn't pay off a $1,000 um, loan, or it was on your account for like 3 months versus maybe remaining delinquent on a smaller amount for uh, but for a longer period of time, like a year. Which would affect your credit report or your credit score more?
Ooh, that's a great question. Um, while we know the basic formula, the actual nitty gritty is kind of like the formula for Coke, right? If Coca-Cola were to give out the formula, then they would be out of business. So um, I don't truly know if the dollar amount is playing a how heavily that is weighted. I'm sure it is weighted, but it's really the severity of it. So if you've got the mortgage that's $1,000 past due for 1 month versus a credit card that is 4 months past due and it's only $100, I can tell you from my personal experience in looking at credit reports, because the mortgage is greater, that is having a more severe impact on your credit score. But to the extent, I can't say. But from my experience, yes, the dollar amount is factored into it in some way, shape, or form.
Okay, great, great. Thank you. Yeah, so it's a delicate balance there.
It sure is.
And as people may be thinking about students and starting, perhaps they need credit cards as they go off to school, and they're co-signing for those credit cards. What is the effect on the person who's co-signing for the credit card, and does that start to build up credit at all for like the student or the person who's just starting out?
It does. Now, if you were to add your child on as an authorized user, lenders can see that it's an authorized user status, and that is not weighted like if it were your own or something that you were co-signing or joint on, because they're recognizing that, like, yeah, well, you might have access to this line of credit. There's someone else actually managing the repayment. So about a decade ago, the formulas were tweaked so that wouldn't happen, because that's what all of our parents did, is that they put us on as an authorized user, and bam, you're a 750 and you're only 19 years old. So they wised up on that. But one good thing to point out here is, even if you were to have a small $500 line of credit or credit card for your child, that's great in helping them establish credit and, starting that responsibility of repaying on time. And even though it's little capacity that they have, at least you know that they're not going to get too far underwater if they should need a little bit of help in the long run.
Right. And that would help to start them building that credit score on their own.
Absolutely. If it's a joint account, it's weighted equally in the credit score. So you wouldn't have to worry if you were listed as primary or secondary on the account. It's weighted into the score the same.
Okay. Great. Great. Good to know. All right.
Yeah.
Let's go on to the next part.
Okay, great. Now we're going to go over how to improve your credit score, and then we'll get into how you can obtain a copy of your credit report. So, how do I improve my credit score? On-time repayment history. It's the single most important thing that you can do. Increasing your capacity. Now, as a lender, I would like to tell you the best way to and most impactful way to increase capacity is to pay down your debt. There is a little loophole to this where if you were to open new accounts, that does automatically increase your capacity. Sure, it is a inquiry on your credit report, and it's not quite an aged account. So you can see how all of these pieces are really a part of the puzzle. But that is a way to increase your capacity that will increase your score. Getting rid of unneeded debt, paying off that debt is really the most beneficial thing that you can do as a consumer. Transferring balances from credit cards to a closed-end personal loan not only helps you eliminate the debt because at the end of the term, the debt will be paid off, but it's also increasing your capacity because you're paying off that credit card with this personal loan debt consolidation. So that's kind of a win-win for you. Revolving balances, try and keep them on the lower end and not be maxed out on your credit cards or go over the limit. Going over the limit is also factored into your score. And even if you're paying on time, that's a red flag for lenders and it will decrease your credit score. Keeping older accounts open will improve and help you maintain a solid credit score. And then making any corrections that you need. It is your right as a consumer to make sure that the information on your credit report is true and accurate, so making any corrections could help your score. Dupage Credit Union does offer a credit builder loan, so if you're looking to establish credit or reestablish yourself after one of life's many challenges, this is something that we offer where there are secured loan funds, so you don't have to put that out of pocket. We secure those for you. It's got a low fixed rate and a small set term, and there's no credit score requirement. Next, we'll go into making corrections on your credit report and accessing your credit report. Now, we see and hear a lot from Credit Karma, and there used to be a commercial with a really catchy jingle that we would hear all the time, but truly, annualcreditreport.com, it is the only site sponsored by all three credit bureaus, Equifax, Experian, and Transunion. They didn't do this because they were feeling warm and fuzzy. They did it because they were mandated to, because it is your right as a consumer to make sure that the information that is being reported about you is true and accurate. So the only way to do that is to have a place where consumers can access their credit report. Annualcreditreport.com is this place, and you're able to obtain a free copy of your credit report from each one of the three bureaus every 12 months. And I will add here that currently, because of the pandemic and the unfortunate increase in fraud, annualcreditreport.com is actually allowing you to access your credit report for free every single week through April, just to make sure that everything's on the up and up. Now, with that said, they are giving to you for free your actual credit report. If you want a score attached to that report, they're going to charge you anywhere from $8 to $12-ish per credit bureau. But really, that's not what you need. You need to look at the items on your credit report. If there are any discrepancies, you need to contact the financial institution to have those corrected. But your credit report is free. The credit score, that's where you get into the trickiness of, because each of the bureaus have so many different scoring models, Unfortunately, they could be using an educational scoring model. This is oftentimes what Credit Karma does, and it's a little bit padded, a little bit fluffier than what the actual lenders are looking at when deciding if and how much credit to extend to you. Going to annualcreditreport.com is very easy. You go there and this is the main hub, and then as you contact each of the bureaus, they come up in a separate window, and so you can always get easily back to this hub. Because of the pandemic, they are offering those for free on a weekly basis. But outside of that, my pro tip here is to access each one of the bureaus at varying times per year. So any other normal year, I would, let's say, pull my Experian in January, and then in April, I would pull my Transunion. And then in September, I would pull my Equifax. And that way I'm kind of getting my own year-round credit monitoring for free. Unfortunately, identity theft is just on the rise, and people are doing really unfortunate things with unemployment benefit scams and filing tax returns, on behalf of someone else and opening credit cards in someone else's name. We've just seen such a large increase in fraud as everybody has in financial services. This is unfortunately just something that's not going away anytime soon, and these scammers are getting trickier and trickier as the days go on. So make sure that you're really paying attention to your mail. If you're receiving unexpected bills in the mail, that's a red flag. Definitely open them and call the financial institution attached to it to try and get to the bottom of it. If you were to receive that unexpected credit card statement or loan statement, again, that's a very big red flag. If you were to also receive a denial of credit. So anytime you are denied credit, it is a regulation that you have to receive an adverse action notice in the mail. And this tells you as a consumer why your credit was denied, what credit report, if any, was used, which bureau, and what the score was that lender used. And it'll also list information on how you can then get a free copy of your credit report to make any corrections so you can be approved in the future. But if you get an adverse action in the mail and you know that you haven't been applying for credit recently, certainly call those lenders and see if someone was trying to open a loan in your name. Additionally, please make sure that you monitor your online banking or e-statements or paper statements, however you balance your checking account and credit cards. Be sure that you are making sure that the charges are yours. A lot of times what these fraudsters do is they will try putting through small dollar amounts in hopes that you won't notice. They'll make it $1.99 or $2.99. That way you think it was, just something that reoccurred on Amazon or whatever it may be, hoping that you won't see that come through. And then they'll start hitting you for larger amounts gradually. And if you continue to not notice, they'll just keep draining your account or racking up debt. So really do look at your online statements. What do you do if it happens to you? First thing that you do is contact that source, whether it's a credit card company or your financial institution. Contact whomever you can get a hold of to try and get to the bottom of it. They are also going to be very curious because they don't want to be attacked or have other members go through the same unfortunate circumstances that you're going through. So they are going to do what they can to help you and to help recover any losses. If you Another good idea is to contact the credit bureaus, and you can add that optional consumer statement. Please contact me at, and then you list your phone number to verify that it is in fact me applying for credit. You could also put a freeze on your credit bureaus. That way, anybody trying to look into your credit would either need to have a PIN that is provided by you, or you would have to call the bureau to unlock that credit report for a short period of time. Usually they'll unlock it for 24 hours if you were to go car shopping or something of the sort. If it's really bad, the financial institution will work with you in filing a police report, or even filing a report with the FTC if needed. When you are looking at annualcreditreport.com and you've got your copy of your credit report in front of you, it's a very consumer friendly report to read. It'll list all of the information for the creditors, their phone number, address, any contact information. So definitely look for those reference numbers, those toll-free numbers to call. You can also dispute items directly with the credit bureaus if you're not able to come to terms with that financial institution. If you think that you were in fact not delinquent and they are reporting you as such, you can file a dispute directly with the credit bureau, and they allow lenders to respond for 30 days to provide evidence that what they are reporting is true, or to make the correction on your credit report. And if that lender does not respond after 30 days, that dispute automatically is ruled in your favor, and that item would be removed, that negative item would be removed from your credit report, also resulting in an increase in your credit score. And then finally adding an additional statement of a dispute that was resolved with the resource. If you dispute something on your credit report, and you're in the middle of that dispute, they're going to report that to the credit bureau. So if another lender is taking a look at your credit, they'll say, oh, why is XYZ delinquent? And you can say, oh, I'm disputing that. And the lender will say, yep, I see that right here. It's listed on your credit report as that you're disputing it. And when you're disputing an item, that trade is not being factored into your score, because they don't want to bring down your score if it's not true and accurate information. Dupage Credit Union is partners with GreenPath Financial Wellness. It's a free service that we offer for all of our members, and these are all professionals in financial counseling services and can answer the good, the bad, and the ugly questions that you may have for them. And that is a free service that we offer to our members. But I am here for you right now to answer any additional questions that you may have about your credit scores and credit reports. And also, the library is nice enough to pass along our contact information. Feel free to give myself or any one of my teammates a call. We are a non-for-profit financial institution, and any of my teammates can help, and we're all knowledgeable in these different subjects. So feel free to reach out to the credit union for anything that you need.
Okay. Well, thank you so much to both of you, Pam and Kim, for all this great information. As you were talking about all of the concern over fraud recently, especially, I'm concerned about our seniors. Is it possible to request a credit report on behalf of someone else?
That's a good question. So when you're on annualcreditreport.com, of course, it's going to ask you for your personal information, name, address, social security number. In addition to just asking for your social security number, they are going to ask more questions specific to you, and they derive these questions based on information that they have on your credit report. So for example, they will list a security question when you're trying to get into this credit report of which address have you not been associated with, or they'll ask, do you currently have a car loan, or what is your current car loan payment? Is it A, B, or C? And so that way, they also don't want people accessing information that is not theirs, and elderly abuse is really a large problem. So if someone is accessing another person's credit report, that person is probably sitting right there with them and is providing the answers because it is very personal information.
Okay, but if we were concerned about a senior in our lives, it is possible to investigate and make sure that nothing's happening in their on their credit report on their
Absolutely.
behalf on their behalf. Okay.
Yes, certainly. There are terms and agreements, of course, saying that if you are doing it for someone else, that person is there with you and is given consent, and would have to know all of these answers. So, yeah.
Okay, and there someone else entered a question about just if you could go over the numerical scores of each bureau.
So Fair Isaac, it's going to be the same for Equifax, Experian, and Transunion. It's all three 350 to 850 is the range of the credit scores, and that's going to be true for all of the bureaus. So while one bureau might say that you're a 720, another might say that you're a 700, that's because one of, say, TransUnion is not receiving the information about your Victoria's Secret account. It's only being reported to the other bureaus. That's why it's important to look at all three of the bureaus to see who's reporting to where and really gain a good sense of your financial picture. And a lot of times, especially for mortgages, they'll look at all three and then they'll take the median score.
Okay, all right, thank you. And someone else is asking, how bad is the Illinois 2020 unemployment fraud going to be for this year's taxes? The Wheaton and Elmhurst police have been made aware of it, but it may be affecting perhaps our unemployment scores. I'm sorry, our credit scores, that unemployment fraud that occurred.
Yeah, that unemployment fraud, it's a really, really big deal right now. We're seeing a large increase in that as well. So I would say keep checking your mail, because IDES, the state of Illinois, will mail things in like a physical piece of mail. So keep an eye out. Anything Illinois Department of Employment Security, IDES. If you see that, absolutely open it. I would also suggest filing your taxes as soon as possible so you don't have the chance of someone trying to file with your social security number, because that's such a mess getting the IRS involved.
Right, right. And someone mentioned that they have been a victim of that, and they put a freeze on their credit report. Are there any other strategies to use to diminish the harm that's being caused there?
Unfortunately, not just putting that freeze on the report and going and checking the report that is out there. The information that's out there is accurate, and I would say keep that freeze on there for another year or two, because we don't know the full ramification of if people are going to be sitting on social security numbers for a while and then in 6 months then trying to use them. So just constantly being diligent and checking your credit report at least once a year to ensure that you're not seeing anything on there that's not yours.
Okay, great. Thank you.
Mm-hmm.
Someone asks, sometimes I get a credit, I get an offer for a credit score through the bank. Is that the same as using annualcreditsreport.com, or is that different when it comes from the bank?
Good question. A lot of times the bank has partnered with one specific credit bureau, and they have a partnership where that credit bureau will provide an educational score to the financial institution, and then that financial institution is offering this as, you know, a courtesy to their customer, and that's just telling you a generic score. That is not giving, oftentimes it's not giving you a report. Sometimes they will. If they are, great, absolutely take a look at it, make sure that everything on there is yours and it's reporting accurately. But oftentimes those scores could be padded a little bit versus what a lender is looking at. A good example is when you're car shopping, if you were to look at financing with the dealer, they're working with credit scores that are weighted more heavily. The formula is weighted more heavily based on your auto loan repayment versus if you were to look at a mortgage loan, they're going to look at a more generic formula because they're concerned about your repayment to all creditors, not just one specific type.
Okay, great, great. Thank you. Someone else mentions they've seen boosts advertised,
Mm-hmm.
and what are those and how does that work?
Yeah, so Boost is a new thing offered by Experian where you can provide them information, let's say your AT&T bill or your Comcast bill, and they will report it on your credit report. So you can essentially show lenders that you're paying these other things on time. But I can tell you from a lending perspective, that has no impact on my decision. I want to see other actual financial institutions take a risk on you and how you're managing those. Additionally, those services like Boost, where you're self-reporting is what it is. You're self-reporting that payment history. Those are not factored into your credit score because they're not true loans.
Okay, good, good. Thank you.
Mm-hmm.
And this is a great last question. Do you have to live in DuPage County in order to be part of the DuPage Credit Union?
Oh, I love that question.
Yeah.
No, you don't. No, we while we started as a small little teachers credit union, no, now we're a big full service financial institution. We've been around over 60 years, and no matter where you live or work in the state of Illinois, you're eligible. So I promise you, we can help. Um, we're a non-for-profit financial institution. We offer all of the same products and services that the big guys do: online banking, checking, savings, jumbo money markets, first mortgages, second mortgages, home equities, car loans, personal loans, those secured loans, um, car loans, you name it, we can help you. And now we have all the technology with online banking and contactless loan document signing. We are here to help you with your needs now and into the future.
Great. Okay. Well, as I said, that was a great question to kind of end with. We certainly want to thank Pam Nystrom, Kim Alongi, and the DuPage Credit Union for generously giving your time and all the effort that it takes to put together these presentations. I will be sending out the link to DuPage Credit Union's website following the presentation to everyone who's registered. And Pam and Kim have also provided their email addresses so that you can contact them with any additional questions that you have. If you're watching the recording of this presentation, you may request those resource links either by just pausing on the screen and taking down the website there. But also I have those email addresses, and you can contact me for those by writing to ce@wheatonlibrary.org. That's CE like community engagement at wheatonlibrary.org. The recording of this program will be available within about a week so that you can watch it again or recommend it to someone who needs this information. But thank you so much for joining us tonight. We certainly appreciate all of your time. Everybody stay safe and healthy, and we hope to see you again soon. Good night.